I'm 90 odd percent sold. Why?
Yeah.
Because the chart is outperforming Bitcoin and ETH. And there's no philosophy behind it. It's like, I like Solana, love what they're doing, and it's proving it on the charts.
Solana's primary goal is to address the scalability limitations faced by other smart contract platforms, allowing it to better support decentralized finance, DeFi, non-fungible tokens, NFT, and other decentralized applications, DApps. These limitations, often attributed to Ethereum, the leading smart contract blockchain, can lead to slow transaction processing times and prohibitive fees, limiting user experience and discouraging adoption by developers. Solana's architecture aims to address these concerns by increasing transaction speed and reducing costs. Solana's low transaction fees and ultra-fast infrastructure make it an ideal breeding ground for meme coins. The accessibility of the platform with its low barrier to entry allows for vibrant token communities where everyone can participate in the fun and potential of meme coin development and trading. In today's video, we will share Raoul Pal's opinion on Solana, which says that small investors can multiply their wealth with Solana in this cycle. But before you start the video, make sure to subscribe to our channel and hit that bell icon so you don't miss any updates. Pal is 90% Solana because Solana is doing fine, and the graphs prove it. Almost all the prices are based on the number of active users and the total value of the transaction. So in this case, the prices are good. If something seems sustainable, it is that the trend goes against Solana. Again, only about 10% of your portfolio will do this type of thing, but you can make a lot of money with this. This is what led him to join WIF and Bonk, because they were overtaking Solana. The entire code, the liquidity cycle, everything is correlated, every asset in the world that makes it up, and it's all driven by the same debt refinancing cycle, making it the simplest macro risk-taking environment ever. Because central banks have also eliminated the left tail by saying that we cannot let the safeguards fall too far. Then we are going to devalue the currency. This is the case. So we have the simplest and easiest risk-taking opportunity that has ever existed. If we look at the ISM, it is still slightly below 50 and struggling to recover. Looking to the future indicates the loudest cry, so it's about to start again. But we are not seeing massive retail participation in crypto because jobs are still a bit scarce. People simply don't have cash. So if you think about Tesla stock, why is Tesla stock relatively weak? Although it has all the technological elements, it is because people buy cars when they have money, and now they don't have much. They are a little richer. So this economic cycle, as it recovers now again, if you go back to all the code and cryptocurrency and macro seasons or cryptocurrency seasons, macro summer is really when ISM starts to rise. Earnings start to rise. The world that must be observed taking risks. It's that simple, and that's why it repeats itself so beautifully. So when we step back and look at the year 2022, liquidity was on edge everywhere. All asset prices have fallen because the obstacle, its value, was to revalue the currency, not devalue it, because you are reducing the currency supply. The S&P 500 shows consistent performance because it is a very broad and economically sensitive index. It follows that global liquidity does not provide any superior performance, so owning the S&P 500 represents about 8% annually since 2011. That's the same as a devaluation. NASDAQ got around 17, and then Bitcoin in La La Land got 150 because we also have network adoption patterns, which we see in individual cases. The stocks, the tech stocks that are being embraced by the NVIDIA network, all of a sudden, that's what they're doing. But we have a whole tech stack that's doing it en masse. It's so fascinating. That's all for today. Tell us what you think in the comment section below, and don't forget to like this video before you go. Thanks for watching.